it's an interesting question. Currently, I don't think these things are mature yet in South Africa, but there's a lot of new avenues, I think, that will be with us in the next 5 or 10 years, hopefully. Firstly, the banks, as far as I understand it, the banks struggle to provide loans to people based on their individual nuances. They try, but banks are such big, slow-moving animals that, they try and put everybody in the same box. So, if you earn a good salary and they can check your what other expenses you have, your credit history, and so, they'll give you a loan. It's quite easy to get a home loan there. But if you are not within that, if you fall in a different part of the economy, if you're a small business owner, or if you're a sole proprietor, or just a guy who does in informal settlements, makes money cash, and doesn't have a lot of online presence or financial history, formal financial history, those people are currently falling behind or not getting access to finance. And I think the market is realizing that. I hear that Capitec is aggressively moving into the home loans market. So, and they're doing it because of the fact that they have penetrated the previously, let's say, informal market quite heavily with their banking. And they've seen the money coming through people's accounts. So they've got better data that they can leverage, and then they can serve those clients, which is brilliant. And I think a lot of guys are going to follow suit. There's guys like Time Bank, all of these other new startup banks, this Bank Zero, these online banks, they're trying to do the same thing. A lot of these guys are not fully fledged banks in the traditional sense. They are more, guys that do specialist lending to certain sectors. So I think it's going to be an interesting time. I think there's going to be a bit more competition in the market, which is good, which is going to be good for the consumer, for the guys, for us, wanting to get home loans. And obviously for me as a property developer, the easier it is for somebody to get a loan, or the more people that can get a loan, it means it's an improvement in the property market. So our country is heavily driven by, and my business is heavily driven by, the availability of finance and the price of finance. So if interest rates go up, we see a slowdown in people buying new houses from us or new apartments from us. And similarly, if interest rates go down, we see that more people want to buy, and we can actually charge more for those houses. But another factor that people might not consider is if interest rates go down, plus there are more people competing for these loans, or more banks competing for these loans or giving out loans. It means there's a larger supply of loans, which also will increase the amount of buyers that can potentially buy. So that bodes well for me, being a guy that sells property. But yeah, it's good for the consumer. I think that's the point. More people getting easier access and cheaper access to funding. It doesn't happen overnight. Technology is amazing, and it's quick, and we think it's very quick, but these things also take time to filter through. Then you've got the other avenues like this peer-to-peer lending, crypto-backed lending, all of these things. Peer-to-peer lending, and I'm not an expert, so just bear with me, but peer-to-peer lending, as I understand it, is instead of getting money from the bank, you go through a platform which connects, let's say myself, I've got money that I've got spare in the bank, or I've got spare money that I want to invest, and I want to get a better return than I can get in a fixed deposit. And so then, let's say somebody comes and they want to buy a house, and I judge whether I want to directly lend that money to them through a platform. And I think that's also obviously, that increases the supply of money in the system, and it increases the chances of people that wouldn't get traditional banking finance getting access to money. So that's good. I know it's been around in America for quite a while, but I don't know how big that market is relative to the traditional banking market, traditional home loan market. Then the other thing that people mentioned were crypto-backed lending. I don't know. Crypto-backed lending means that instead of, people, well, I guess instead of, or additionally to people lending you money based on your income payability or your repayability and the asset that you have being the property that they're funding. Crypto lending would be using the crypto that you have as security. I don't know if that's going to be there yet, because the problem with crypto is a lot of guys are making money because crypto is so volatile. It goes up and down, and they make money by trading it. But when you have something that goes up and down the whole time so much, you don't know really what it's worth. So to put security, to give somebody a loan based on the value of that product will be difficult, unless you give them, if they've got a 10 million rands worth of crypto and you give them 3 million rands worth of a loan, maybe that can work, because but the problem is nobody knows how volatile, what the maximum volatility of crypto is. So if crypto gets better, and there's indications, I'm not a crypto fan just because I don't know enough of it, but there are indications that I see that show that something like Bitcoin is becoming more and more stable. More and more people are accepting it, more and more institutions, large financial institutions are supporting it or backing it. So maybe that'll come. But in the end of the day, it's just an asset. For good lending practices, whatever you lend to somebody, there needs to be more security. They need to give you more security than what you're giving them. So there needs to be a value placed on that. But yeah, so there's all these new ideas, but they all center around the premise of giving money to somebody that can repay it. And if you find people that some other people have missed, like a small business owners, sole proprietors that are not getting loans at the moment because they're not falling within that tick box or within that framework, I think there's a lot of business to be done with them. And I hope that people grab that opportunity and lend to these people, because it just drives our economy and it's better for everyone.